What's going on, everybody? It's Jeff here. Welcome back to the channel. Lots to talk about today as the market opened up, gapping down almost 3%, and another stock is squeezing. We're going to cover everything, so let's get right into it. First off, let's take a look at SPY, slowly recovering off a nice bounce off that 375 psych level. Going into the FOMC this week, there is one thing that is concerning me, especially because inflation continues to run higher. Multiple times, many Fed members, including Chair Powell, had stated that 50 basis points hike was on the table for June, and that anything beyond that is something that they might look at, but really wasn't something they were going to think about doing. And as you can see here, only 30% of that 75 basis point hike is priced in. You've got 8.6% inflation. We're currently sitting at a 1% Fed fund rate. That gap is just very, very wide. In order to combat inflation, I think a more aggressive approach needs to be taken. However, when it comes from a market standpoint, seeing that only 30% is priced in, if there is, a 75 basis point hike, be prepared for a very, very strong reaction. Now, let's talk about Redbox, which has been a phenomenal mover over the last few days, high of trying to get over that $18 mark, really squeezing to the upside. Two comments on this. First one is the play is very unique because Chicken Soup for the Soul Entertainment had come up with it, had agreed on a deal with Redbox to purchase them at a fixed rate exchange ratio of 0.087 of a share of their stock, which would basically price Redbox, implied share price would be 65 cents. Now, a couple things happened. One, shorts piled into this position. However, the date for the deal has not yet been made, and therefore that's why you're seeing a lot of action to the upside. Currently been playing a very little bit. Market makers haven't been too friendly, and the spreads always aren't really tight. But let's take a look at Redbox. Right now on Fintel, it is almost 200% short interest. Other platforms are showing even higher than that. There hasn't been any availability for short shares since June 2nd, and on June 2nd, the cost to borrow was astronomical, one of the highest I have ever seen. Why does this excite me? Not only does it have to do with the movie space, is because we talk about cycles running all the time, cycles and themes. When Tesla starts to really move and that EV sector got hot, everything else went with it. We're talking about small caps starting to get hot right now. You start to see that slowly. All right, there's a trending small cap summer. And what it does is it basically shifts attention towards a theme. Well, the meme sector had its theme. However, that faded a little bit just for a temporary time being. There was a little bit of interest from other retail investors, obviously not us apes, still holding the stock. However, stocks that were heavily shorted, they were all going at one point. Everything that was short was popping. There was numerous ones, to name about. And this is actually a really good sign for any stock that is heavily shorted. When you start to see movement like this, it might draw more attention going to it. Now, if you are investing in this stock, just know how every squeeze goes. It's parabolic to the upside, and the downside comes just as fast, if not faster. Any news on an acquisition, I believe, would really put some pressure on the stock to potentially squeeze to the upside, is always there. However, you saw the numbers that I just showed you, that the implied share price would be about 65 cents. And so obviously the downside is really unlimited for Redbox as of right now. However, that date hasn't been there. So continue more action to be had on Redbox. However, look at AMC. Right now, the short interest just by Fintel is 21%, 3 days to cover. There are 0 short shares available as of just an hour ago. I don't pay for Fintel anymore, guys. And the cost to borrow has arisen to 19%. You have to look at Ortex to see exactly how they are reporting it. But like I said, you start to get that pressure and that focus. Now, a lot of stocks are heavily shorted right now, just in general. Reason being is because look at the market. We've seen a massive, drop off, especially fairly quickly after channeling in between that 407 and 418 area. And obviously the shorts are looking to be able to capitalize on this position and to make moves to the downside. Okay. But inevitably they're getting to a point where a lot of these stocks really have nowhere to go to the downside. I've been paying attention to other stocks that their valuation is actually getting it to a point where they have more cash on hand available okay? Meaning the amount of cash they have in reserves in their pocket, Facebook is almost one of them, exceeds their market value, okay? Now, they're not quite there. Some of them are there, but some, better companies are getting closer to that 2-to-1, 3-to-1 ratio, and you're not seeing that, 10 billion cash on hand and 100 billion market cap. And like I said, there's only so much downside that can be happen. So keep an eye out for, the FOMC when they release, when they talk about those hikes. Just know that 75 basis point is really not priced in as of yet. So like I said, seeing that continued move to the downside would not happen. And also keep an eye on any heavily shorted stock. You can go check out a list, on the internet of stocks that are heavily shorted. And that's it for this video, guys. I'll see you in the next one.